The chairman of State Bank of India, Rajneesh Kumar, is joining us on the phone line. Mr. Kumar, very kind of you to take our call this morning, sir. Thank you. Sir, big relief for banks. This was a large stress account for banks, and resolution had stretched out at least over the last 6 months. Your thoughts, sir?
Yeah, this deal shows the way that if promoters are willing to settle and if there are good quality assets, then there is no need for banks to take any haircuts or loss. So it sets a good example and definitely a good relief for the banks.
Banks are not taking a haircut. Can you give us any sense of whether the loan gets repaid or does the dues get transferred to the new entity?
No, that comment which I made was in general terms, but the specifics of any account we don't discuss. That is not possible for me to divulge any details.
Sure, I take that point. But sir, the point you were making about, promoters being willing, is it also in many ways linked to the IBC? Because I think promoters now realize that going into IBC may not work out in their favor, which works for banks because then banks can resolve some of these large assets perhaps even before taking them to IBC.
So IBC definitely brings discipline in the market, and it brings discipline for both for the lenders as well as the borrowers. And yes, there is a realization amongst the promoters also that if the case is referred to IBC, then there is a very good chance that they will lose complete control of the business. So to that extent, it is very helpful for the creditors.
Okay. Sir, can you just also help us understand in terms of the exposure to the telecom sector? I think with this large account resolved, do you think the stress that was building up on telecom, has that peaked?
Yeah, there is definitely stress in the telecom sector, but as far as the State Bank of India is concerned, most of our accounts are getting resolved, and they have been resolved because of the promoters' willingness to settle the dues, and even if there have been losses for them, they are being absorbed by the promoters.
Okay. What about the other large stressed accounts, sir? What is the pace of resolution there looking like? I think a lot of them are already in IBC, the 12 that first got referred there, and they're coming into that 180-day period deadline, sir.
So we are very much in the resolution phase, and next 3 to 6 months, the accounts which got referred in the first phase, definitely the resolution plan for all of them will be put in place. And the cases which have been referred recently in the months of October, November and December, so because there is a 6 months time period, so between January and June, hopefully there will be a lot of resolution plans in the place.
Sir, just, there was some uncertainty about whether some of these would need to, the timeline would need to get extended because of the new ordinance, which has now become a bill. So your understanding on whether that would require perhaps rebidding in some of the cases or a relook at the resolution plans and whether that would extend the timeline, sir?
The overall timeline we don't intend to extend, although like wherever their provision is available, another 3 months. So that under that provision, the Committee of Creditors and Resolution Professional may seek time as one sort of a safety measure, but the intent will still be to complete the process within the original time frame of 180 days.
Has that issue of promoters, sir, created a little bit of confusion as to whether promoters can participate in the final submission of resolution plans? Has that created confusion or has that led to lower sort of interest in some of these assets or interest at lower prices?
No, I don't think so, because every asset has its fair enterprise value. And this is my firm belief that the banks or whenever the resolution plan is submitted, the creditors, they will be able to realize fair value of the asset. As far as promoters are concerned, there is not a 100% bar, but they have to clear the overdues before they become eligible to submit the resolution plan.
Okay. So what is the kind of, in the large 12 accounts, can you give us a sense of, the interest that has come in, not specifics, but is there adequate interest to ensure that the haircut is at a minimum? What could be the range of that haircut?
Very difficult to say at this stage because the offers are yet to come, particularly for the larger accounts, but there is considerable interest as far as the steel sector goes because The sector is showing signs of turnaround. The EBITDA margins have improved. So that's why the interest in the larger steel plants is considerable. And that gives some hope and comfort to the lenders that the losses which banks or financial creditors or other creditors may have to incur, that may be minimal.
Okay, and the same would hold true maybe for the second list of accounts, because so those are slightly smaller accounts, so it's difficult to understand, whether there'll be interest across them or will it be very specific, bottom-up kind of approach, sir?
It is account to account and in what sector the company is, what is the quality of their physical assets, what are their liabilities. And that's why maybe we will have the sufficient data to arrive some sort of a conclusion on a portfolio basis after at least 6 months when some of the resolutions happen.
Okay. So in this 6-month period, sir, what would be the provisioning cycle looking like? So you've said that Jan to June, you should see some significant resolutions. Provisioning, sir, will we still see 2 tough quarters for banks for provisioning at least?
Yeah, it may be at least 2 quarters would be relatively tough because you have to build up provisions and there may be some gap in the provision on the existing assets, but otherwise the situation on the ground is improving in the sense that fresh accretion to NPAs, if we leave aside the legacy accounts, then there is a lot of moderation there. Accordingly, if we look at the provision, the aging provision or the provision on the existing accounts, that has to be taken care of, but otherwise the provisioning requirement on the fresh slippages will return to normal.
But on the second list, sir, is March the deadline to finish providing for the second list of accounts which will now perhaps go into insolvency?
Yes, that is the case, and by March, banks will have to provide whatever are the RBI guidelines there.
All right. So one last question, sir. We've seen, SBI and banks in general raise a fair amount of capital in 2017. I think you did some Tier 1 bond raising or approved some Tier 1 bond raising this week as well. So you think you're going into the next year ready to start a new growth cycle? The NPA cycle is still elevated, but it looks like it's closing, at least a recognition cycle. Are you ready to get into a new growth cycle, sir, in the new year?
We are very much hoping for that. We have readied ourselves for that. And we have sufficient capital to fund the growth. Only issue is about how does the demand pan out in the next 12 months.
So would
particularly from the corporate side.
So would there be refinancing demand at least first off in some of these accounts, for instance, which start to get resolved?
Yeah, but refinancing demand then it does not create demand for additional credit. That is just shifting of credit from one bank to another. What I am talking about is the credit growth in general.
Okay, so you would expect only a slow pick-up in credit growth, sir? Could you give us a little bit of flavor there?
This year, our credit growth target for SBI was estimated about 5%, for example. So next year, I would be happy if we are able to achieve 9 to 10%.
All right, sir. We'll leave it at that note. Very happy New Year to you, sir. And thank you once again for speaking to us here on Bloomberg Quint.
Thank you.